Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is July 5th, 2022, and I'm coming to you for the second time for the Tuesday live stream. Welcome one and all. We're going to get started in just a minute. Alright, as always, let me double check and make sure this stream is okay. Okay, looks good to me. Alright. And definitely like the stream up once you get into the room. And let me know who's here, where you're coming from. If you want me to look at anything, I will periodically just check the chat. So definitely shout yourself out, like the stream up, let me know what's going on. Alright, let's get started. So this morning, okay, let's go back 2 episodes. I was saying how I believe it's going to be a green week, okay? From my analysis, it's likely that we're going to have a green week, okay? And I said that I said that mostly because of this pattern that you can see here, this corrective pattern that I have in Bitcoin, and the consolidation reversal pattern that I see on the rest of the altcoins, okay? So just looking at Bitcoin first, you have the exhaustion of a trend. I believe this trend, this larger trend, has been exhausted, okay? And here is the here is the orthodox low, right? And so right here you're getting an initial break of structure. And the reason I have it projected into this blue box here, just like I said this morning, I'm simply using the Fibonacci extension tool to project right here from this A wave, retracement of this B wave, right? I'm projecting from the 1 to the 1, 2, 3, 6, which is the most likely destination or the most likely target, right? Between 22.5 and 23.4. And then we can also see an extension of this C wave closer to the 1618. This is why I have the box a little larger than just between the 1 and the 1236, because sometimes this C wave extension in these ABC flat corrections do extend to the 1618, okay? And that would be 24.8. Okay, so that's pretty much, where I think Bitcoin's going in the immediate short term. Now, since this morning, there have been a few developments, and I'm just going to talk about that. To do that, I'm going to jump into the hourly time frame. And this move was expected, okay? So yesterday, or actually on July 4th, I was saying that it was likely that we get some positive price action, and we did. We got this 5-wave structure, okay? It looks like 5 waves to me. And if you take your Fibonacci retracement tool from the bottom of this structure to the top, you see there's a 618 retracement right here, okay? So that, to me, says that this is impulsive, okay? It is impulsive. It's likely impulsive. You came down and tested the 618 in a very, very quick move to the downside, which is customary in a wave 2 correction, okay? Remember, wave 2, if this is wave 1, right? Wave 2 typically corrects sharply, right? And it corrects 61.8% of wave 1, and this is what we're seeing here. So just probabilistically, it's likely that that was wave 1, this is wave 2, what you're seeing is wave 3, okay? And so if you want to break it down, you want to get really technical, you can anticipate wave 3 take you, let's see, so extend wave 1, retrace wave 2. Wave 3 should take you to around 22K to 22.6, okay? So this is what I'm saying for Bitcoin. I'm seeing us being in this C wave, and as you all know, a wave C is an impulsive wave. And so if we're counting impulsive waves, it's easy. Up until now, I mean, and for maybe a year, 400 days or so, we've been counting nothing but corrective waves, and that is challenging, right? Although we're in a corrective wave, this is the impulsive portion of a corrective wave, so it's relatively straightforward to count out. So I'm seeing something like this, okay? Typically, and this is again just balance of probability, you're getting wave 3 to come to the 1618 to between the two, okay? So like somewhere around here, let's say, okay? And then wave 4, 236382 retracement. I would anticipate wave 4 retrace and retest the top of this right here. Do you see what we're doing there? All this structure right here would be a nice neckline. It would pop out briefly and then retest before continuing to wave 5. That's what I'm seeing, okay? And wave 5, as you all know, is typically the 618 of wave 3 retracing wave 4, okay? So extending wave 3, retracing wave 4. Wave 5 typically targets the 618, okay? This is just probabilities, okay? It can go further, obviously, but balance of probability, wave 5 targets the 618 of the wave 3 extension and the retracement of wave 4. So this is what I'm seeing for Bitcoin in the coming days. I don't anticipate that this take too long, okay? Because again, it's an impulse. Hey MM, yeah, definitely. We'll look at whatever you guys want. We have time. That's what the live stream's for. So yeah, we're just going up, matriculating up in this fashion. All right. So let's say we do get this pump and it continues to go up in this manner, right? And then Bitcoin gives us 14% more. In that time, do expect for altcoins to do much more, okay? Not every altcoin, okay? And because this is a live stream, we have a chance to have a look. Let's have a look at Ethereum. I never really look at Ethereum on this page or on this channel, but let's just have a quick look. Ethereum's a big player in crypto, okay? So let's have a look at Ethereum. Ethereum, I think, is in the same camp as Bitcoin. What do I mean? If you're subscribed, you'll know exactly what I mean, right? I have Ethereum making its fifth wave over here, okay, on May 12th. Sorry, I have it making its fifth wave over here. This is just the fifth wave of wave 3. That's why I have it. It's a minor or minuet, or minute. I don't know what. I think the circled Roman numerals, it's minute or minuet. I don't know. Anyway, it's a small degree. And so I have it making, just like Bitcoin, I have it making its orthodox low on June 13th. Okay, and the significance of that is basically that it has not yet undergone its reversal pattern, okay? Its full reversal pattern, right? It's only been 22 days, okay, since it's hit the bottom. And so we have this, actually June 18th is the orthodox low, right? So it's been less, not 22 days, it's been 16 days, okay? So anyway, I do think that Ethereum is very, very similar to Bitcoin in its price action. And so if we're going to go up right here in Ethereum, don't expect a big run. All right. I'm going to talk about a lot of altcoins during this live stream that have nothing to do with this price action that I'm going to show you. And let's just project this C wave just like we did in Bitcoin, right? We used the orthodox low, the top of A, which is, I think, over here. Where is it? I think it's over here. And then retracement of B. And we can expect Ethereum to come anywhere between the 1 and 1236, okay? And then it could go as far as the 1618, but right somewhere in this area. That's what I'm expecting from Ethereum. Just like Bitcoin, I'm not expecting fireworks. I could be wrong, but it's unlikely that we get a big run from Ethereum or Bitcoin because they have to put in their reversal patterns. And if we look at our momentum indicators, you can see that they're kind of exhausted. Let's just look at the daily real quick. And you can see you're already oversold. Do you see that right here? So this is my stochastic RSI. Momentum indicators are already up here in oversold territory. And that may not mean everything because sometimes you can be oversold for a while and it still doesn't mean anything. You can continue to pump. But if you look at Bitcoin, let's just go back to the watch list. You can see the same thing, right? You're already in oversold territories. However, if you look at a lot of other altcoins, you're oversold here too. Yeah, it doesn't always mean everything because, you know, some altcoins are completely overbought. Sorry, I was saying oversold. I meant overbought. This is oversold. Okay, this is typically where you want to buy. Litecoin also oversold. This is where you want to buy. But anyway, the point remains. I think Bitcoin and Ethereum are kind of still in that corrective phase, whereas a lot of altcoins like Litecoin, right? They started putting in their reversal patterns right here on May 12th, right? And that stochastic or that orthodox low gets you started in your reversal patterns where you have your A wave, your B wave, and then your small a and small b reversal patterns. So, long story short, I expect most altcoins to really run from this pump. Whereas Bitcoin and Ethereum and maybe synthetics and any other coins, projects, assets that have yet to put in their 50 or so odd day reversal patterns, they're not going to move in that way. That's my thesis. This is what I'm expecting, okay? So if this is correct, what we're going to see is the following. So here I'm looking at Bitcoin dominance. I'm going to stay on the daily time frame. We can expect, if what I just said is correct, we can expect Bitcoin dominance to go up for a bit, okay, as Bitcoin rises, but then to fall drastically. And in that fall, altcoins, most of the market, right, is going to rise while Bitcoin pretty much stagnates. You know, it's probably going to go sideways for a bit, right? So that's what, if what I said is correct, this is what we're going to see. We're going to see dominance come up a little bit, stall out, and then dump severely. Not like a little bit, like completely dump. Okay, because this would represent a wave 1, wave 2. We would go into wave 3 for dominance. Okay, so this is kind of my thesis. This is my projection. This is what I'm anticipating. Okay, so I do think dominance is going to rise, but just a little bit, ever so slightly, as we get into that box, into the target for Bitcoin. Okay, so yeah, let's just look at some projections as I promised this morning. Really quickly, I'm looking at the chat. MM asks, do you think CPI will be over 9.2%? I don't really look at anything else, for better or worse. I'm completely just doing technical analysis. I'm not doing any fundamental analysis, and that would constitute fundamental analysis, looking at external factors. Everything's connected. I do appreciate that fact, and I do think that all financial markets are connected and are related to one another. But yeah, and you can see relationships between them, but you should be able to look at a chart that is traded on the open market, right? And from that, you should be able to glean certain habits or certain trends just based off of your model of technical analysis. So technical analysis is what happens when you're looking at charts, and just charts of a certain asset or other assets related to that. CPI, what the Fed says, that's all good and well, but that's fundamental analysis, and I don't do any fundamental analysis. I do, but not in this context, right? I do fundamental analysis insofar as I look at the viability of a certain asset, right? But I don't mix fundamental and technical analysis on this channel. If I'm doing fundamental analysis, I'm telling you I'm doing fundamental analysis. But technical analysis, even if I'm looking at the DXY or the SPY, I'm going to do technical analysis on their charts, right? If I'm looking at the SPY, I'm doing fundamental or technical analysis on the SPY, right? And if I did, I would tell you this, this is all my analysis. This is how I trade. This is how I make a living, right? And it's not like my way is right or somebody else's way is wrong. It's just what I do, and I found technical analysis to be sufficient. Okay, so for me, if I'm looking at the traditional markets, I see this as a perfect correction right here. It's a flat correction. This is an extended flat correction where C probably extends to the 1618. Right? There you go. I haven't done this before. Do you see? I mean, this is how powerful technical analysis is. I just pulled this up. I have not done this. I'm not kidding. But you can see relationships, mathematical relationships using Fibonacci ratios. I take the A wave, retracement of the B wave. It's literally at the 1618 for the SPY. Okay, I can get even more specific, and I can count 5 waves in that C wave, because we know that C waves are impulsive. So my count would be something like this. Something like this. No. It would be something like this. Now I'm gonna double check this. So 4 would probably be up here somewhere. And what I can do just to confirm this is use the extension tool and see the relationship, the extension of 3. But I hope that makes sense. Yeah, so this is correct. I think this is probably, so when I say correct, probably it's most likely to be correct, because your wave 3 extends to 1618, between 1618 and 2 of wave 1. So this is where wave 3 falls. Then wave 4 goes up, probably like this, right? So wait, I just can't see so well because of the stupid gaps. Okay, yeah, I think I was right the first time, right here. But yeah, I'm doing this just to make a point. Like, technical analysis is self-sufficient. I don't need to know what the CPI is. I can just look at what the markets are telling me. This data is sufficient for me in my analysis. And then from here, I have my reversal pattern. I have my big A, big B, and then I have my pivot, small a, small b. I should get a pump here in the traditional markets, okay? And then if I zoom out even more, just giving you guys a reason why I'm saying what I said, okay? Why I don't look at CPI, I don't need to. in my system of analysis. This gives me enough of an edge. Okay, I look at this as being an entire wave up. Okay, this took let's see, this looks like something like this. Okay, I'm just gonna do a rough count, something like this. Maybe not, I don't know. No, my initial, I think that you've gotten an extended wave 3 here. Okay, so I'm looking at this being something like this. Sorry, an extended wave 5. I'm seeing an extended wave 5 here. Okay, something like this. Okay, and I'm not going to, like, go into too much detail. This may be correct or it may not be correct, but that's just like my initial thing, if I had to count that. But what I would do is to see if this is sufficient, right? I know that the guideline between the guideline in Elliott wave is waves of the same degree are proportional in time and in price. Okay, time and price, I need proportion. Okay, so if I take the time it took for this entire structure, and again, this is kind of unambiguous. Look, I'm not even gonna do a large time frame analysis, because whatever came after here, you had a significant dump here in March of 2020, significant enough to say that this is its own thing. Okay, does that make sense? I don't need to look at the whole history and do a whole elaborate wave count, because I know that whatever happened before this and whatever happened after this, this is a great divider, because it was such a sharp, and this is so intense. It's so, you know what I mean? Like, does that make sense? I don't know what the degree is, and I don't need to know what the degree is. I just want to do a rough analysis of the traditional markets, and I just know all I have to do is count this and see what comes after it to know, generally speaking, if we're going to go up or down. Okay, that's all I'm doing here. All right, I'm not going to go into much detail. I don't even look at the traditional markets because I don't need to. Okay, I know some people do. It's not a bad thing. I don't think I'm better than anybody because I don't do that. I just never needed to. I have it on my chart just because I'm curious. Or I have it on my miscellaneous watch list because I'm curious. But this is the first time I'm doing this. Okay, so I'm going to use the guideline of proportionality. I'm going to measure the time it took for us to make these 5 waves up, where however I counted them. And in my analysis, I account for the fact that my particular count that I just put, these 5 waves, could be wrong. Okay, it may not be an extended wave 5. It may be an extended wave 3. Whatever. It doesn't matter, and you'll see why it doesn't matter in context of this analysis. So 602 days. It took 602 days, okay, to do that progression, whatever it was. All right. So then I take my ruler, my time, and from the end to this, so ever since we started correcting, I see it took about 210 days. Okay, so what does that mean? To me, this means that whatever this is right here, this is not the end of the correction, or it's an intra-wave correction. Does that make sense? Basically, all I'm saying is that it's likely that this is one correction and this is another correction, or this is part of this is one wave of 3, right? Because this took 602 days. There's no way the correction is over in 179 or however long it was. Do you guys remember in 179? Let's see. 180. Okay? Do you see what I mean? It's not proportional in time. And the only way it cannot be proportional in time is if it's part of a compounded correction. Or I think it has to be part of a compounded correction, to be honest, because even if it were intra-wave, you would have to have some proportionality, even if it were intra-wave. So, do you see what I mean? I'm not expecting us to just blast off in the traditional markets. I'm expecting us to go up and then back down again. Just by that. Do you see what I mean? I spent all of, I don't know how long, 4 or 5 minutes, and those are my conclusions. If I wanted to go deeper, if I want more information, if I want like to really kind of fine tune that analysis and say, well, maybe this is I wouldn't be surprised if we did something like this. Okay, and then that all took 600 days altogether. So if that is correct, and this A wave has already taken 180 days, right? I am anticipating this B wave or X wave or whatever you want, this middle portion, for us to go up, but correctively, right? So it's going to look choppy, it's going to look off a little bit for 180 days, okay? So I expect 6 months of positive price action, okay? And a lot of people think, okay, well, you have to look at the traditional markets because Bitcoin and crypto and the traditional markets are so correlated. If the traditional markets are going down, there's no way crypto is going to buck that trend, okay? And that's fair, maybe. That's possible. But if the traditional markets are going up, it's likely that Bitcoin can go up as well, okay? And so I think that we're going to get at least, something like that, 180 days or more, something like that in the traditional markets. And it's likely that after that, we do another impulse, a real impulse down, because this cannot stand alone proportionally to this. Okay, this is a standalone correction, obviously, but again, you're looking at degree. Given the fact that this took 600 days, this can't be it. And it can't be even intra-wave, like, oh, this is a wave 2 and this is a wave 4, because even wave 2 and wave 4, they're proportional to the waves that came before them. Do you see what I mean? If anything, they're longer, but it's never shorter. It's seldom ever shorter, okay? So, yeah, that's the long and the short of why I don't look at CPI. I don't even know what CPI stands for. Consumer Price Index. I do, but you know what I mean? It's just a figure of speech. I don't care. I really don't pay attention to any of that. I don't pay attention to how I produce my daily show. I don't pay... Well, I do it. I minimally produce it. I pretty much focus on analysis and trading. Like, if you're here and if you're subscribed, know and take comfort in that most of, like, 95 to 97% of my energy is on the actual analysis and my personal trading. I really don't give a damn about anything else. I'm not doing anything to gain more subscribers. If people want to watch, fine. If people don't want to watch, fine. I don't give a damn. I get paid by the market. This is literally how I feed my family, how I pay my mortgage. YouTube doesn't give me shit, and I'm fine with that because the market pays me. So, I'm dollar cost averaging into positions. I'm looking and watching for what may come next. I have a big plan as to what I think Bitcoin may do in the long term, okay? In the larger scheme of things. Sorry, one sec. Here. So I have a big plan, because I want to watch out for what's likely to happen. Like, all of this has nothing to do with what... And that's the whole... And the beauty of this, and thank you for bringing this up, This is actually... If you read The Wave Principle by Bob Prechter and AJ Frost, right? And that's like the de facto manual on Elliott Wave trading and the Elliott Wave system. This is the crux of Elliott Wave's theory. It is a system that assumes natural... that there's a natural order. And it's not relegated to the stock market or crypto or anything, but anything, and that's like the beauty of it. Most systems, human progress itself goes 3 steps forward, 2 steps back. And that's a reference to the Fibonacci golden mean and the 5-wave advance in the three-wave correction. And that's basically the book. If you read it, he spends the most time on the Fibonacci ratio and how you don't just see this in markets, and it's not news based. It's like built into our nature, and it's built into how we behave. It's just a kind of a cosmic truth. And you can see this over and over in the proportion of a poinsettia that dries up, he talks about, or like a mollusk's shell, or the diurnal and circadian rhythms, all that stuff. It all follows these sort of proportions. So it doesn't really matter if you're looking at stock market or at crypto and what the relationship is to them, because if you look at one system and if you analyze it correctly with good analysis, you should find these patterns. And that's the whole idea. That's why you don't need to really worry about news. If you really study this system, and that's why a lot of people think it's bullshit. People who don't know anything about it think it's bullshit because they think it's impossible that there could be regularity in what they believe to be chaos. But if you really study good Dow theory, good Elliott wave theory, it's statistically significant how regular things happen. You'll be shocked how regularly you can project not only price but time. But again, that's assuming that your analysis is correct, and that takes time to do. But the system works. The tricky thing is, and this is really fascinating, nature is chaotic within the system. So the system is kind of set. Like everything advances in 5 waves and retraces in variations of 3. Advances in variations of 5, retraces in variations of 3. Another way to say that, 3 steps forward, 2 steps back. Even your relationships, 3 steps forward, 2 steps back. It's like, if you read Elliott, if you read Prechter and Frost, they say this is just how things work. But within those sort of ontological rules, or like cosmic truths, there's so much variation, and that is the art of it, right? And you have to be, there's very little objectivity because there's so many different permutations and combinations of what is possible within that sphere. Does that make sense? So you can advance in 5 ways, but you can have an extended wave 1, or extended wave 3, or extended wave 5, or extended wave 3 and wave 5, or extended wave 1 and wave 3, or extended wave 1 and wave 5, right? And you can have a leading diagonal, or you can have an ending diagonal, or you can have neither, or you can have both. And you can have a sharp 2-wave correction, or you can have a flat 4-wave correction, or you can have a triangle 4-wave correction, or a flat 2-wave correction. You can have a running 2, you know what I mean? Like, all the combinations and permutations make it so that you don't know. And so if you really know Elliott wave theory, you really know Dow theory, you can't say for sure. That's why I always say this is just probability. And so the great analysts basically makes it so that any call, any projection is it's high probability. It's a high probability projection based off of, counting certain things out by deductive and reductive reasoning. So yeah. Anyway, that's a long answer as to why I don't look at news. I don't care about what the Fed says or whatever, because it's already built in for me. All right, and that is a question. I don't know how it works, but I just know that over the years I've been doing this and reading charts, I've seen so much regularity. I know it works. I just don't know why. I don't know why it is how it is. All right, let's go into. Okay, Dodge Cricket says, "Why do you do such long trades? What do you mean by that? Can you get more specific, Dodge Crickets?" Philip Cook, I'm going to buy some Bitcoin. Yeah, I think it's a great idea. Whatever method of analysis you use, I think everything screams goodbye. like it's a good buy, right? Even if we're gonna go a little lower, like let's say, let's go back down to the 4-hourly time frame, turn off the log. Even if we do put these waves in, these corrective waves, where do I have them? Here. Okay, let's say we did something like this. Whoops, this is a bit exaggerated. Let's say we did something like this, right? It would still be a good buy, right? You just start laddering in. I mean, like, you know, I would wait for this B wave, but even if you bought here, this is a great buy. They're just like probabilistically, you're going. These are absolutely epic buys, not just for Bitcoin, but anything in the cryptocurrency market. Like, things are distressed, like capital D. Like, this is, you know, there has been blood on the streets. Big trade. If you're trading as a retail investor, right? You're probably, and you're still alive and you still have some positions open. You outperformed, you know, a lot of hedge funds that went belly up because they were over leveraged, right? That's how bad shit is. Like, you know, the best of the best, supposedly the best traders with the most capital, right? Billions of dollars in capital, they completely went belly up because they weren't able to take, you know, they weren't able to trade this market. So if you're dollar cost averaging strategically into these positions at this time, I mean, you're outperforming most other market participants. Yeah. So yeah, I think it's a great time to buy generally. So let's, like we said, get into where I think some of these altcoins can go, right? And that's what I said we would look at this morning. So we're going to look at the watch list, and we're going to look at whatever else you guys say, T-Fuel, VRA, and whatever else. All right. So let's start with Dodo. So for this, I'm just going to go on large time frames. All right. And assuming that this indeed is it, right? And I'm going to do these quickly by hand, so excuse the penmanship. This is my big A right here. This is my big B, right? This is my small a. This is my small b. I think that's it. I think ever since the 30th of June, we've been in impulse. But usually when you're starting impulses from a macro reversal, I tend to see this kind of action, a leading diagonal, okay? So it looks corrective, but it's actually the beginning of an impulse. And what you're going to get typically in these is, you know, a coiling up until wave 5. Typically wave 5 is extended. So I think that's what you're going to get. And that wave 5 is typically going to go to a minimum of the 1618 extension of waves 1 through 3. In any case, I think that your first target here, and I'm going to turn on my VPVR, my horizontal volume indicator. I think my first target is going to be the top of this range right here, okay? I think we're going to then have some consolidation here and then continue, okay? I think it's been long overdue, but in the grand scheme of things, if you zoom out, you see that it's just these markets have really been distressed, okay? And you see that you have a lot of buying pressure here. Or sorry, you have a lot of buying and selling. You have a lot of market activity here. So this is likely to be around 20 cents, 19 cents, some sort of resistance. I don't think it's going to be mega resistance, because I think that once your volume comes in for these altcoins, it's going to start running, okay? And that's when your Bitcoin dominance drops, and in that time, I see Bitcoin just hanging out. Okay, I could be wrong about Bitcoin in that it may just blow through here, in which case I'm going to revisit my my AB recursive, you know, consolidation reversal pattern, right? Which states that A wave cannot be associated with a B wave that extends beyond the 1618, okay? But as it is now, this is not the A wave, okay? It can't be the A wave. This was a wave 4. This is a new impulse, okay? So I can see Bitcoin just hanging out here for quite some time, right? Ethereum hanging out at the top for quite some time before finally making one wick down, and then before making its pivot and then going. But Bitcoin is basically going to be lagging, I see, okay? So that was Dodo. Cardano. We looked at this yesterday, and on the smaller time frames, it's still putting in very impressive bullish divergence on the 4-hourly time frame. I mean, pretty much every asset is bullishly divergent at this point, given what's happened. I mean, look at that. Like, it's stark. You have stark bullish divergence here. I mean, it's just, it's in a free fall almost, right, in price action. And then here you have it in the momentum indicator. It's diametrically opposed, okay? And then what's really strong about this bullish divergence is typically in bullish divergence, you're looking for a cross, right? For confirmation, right? A cross of the K and D lines that gives you confirmation. Here you have 1, 2, 3 different crosses on the K and D lines. So like when this goes, it's going to go. That's basically a powder keg for price action. That's what that states, right? If you're accumulating positions in Cardano, it's really smart because the charts and the momentum indicators are telling you that the next move is going to be huge and you're going to be in the profits quickly, okay? So that's Cardano. All right, Litecoin. All right, you saw this volatility today, just like you saw in the rest of the market, and Litecoin was no different. In Litecoin, I know I've changed this count a few times, but and then you also have some bullish divergence here in Litecoin. You kind of have it all over the market, but especially today, and that tells you that something big is going to happen very soon. But you know, we've been expecting something big for quite some time, but you know, that's the title of this live stream. It's now or never, right? If it doesn't happen now, then I'm throwing all of my analysis out of the window for the past couple months, because you know, we've been in consolidation for 50 some odd days, and I've seen that consolidation as leading to a huge blow, a huge breakout, okay? And this is, I think, what we're on the cusp of. So again, you see strong bullish divergence on the 4-hourly time frame in Litecoin, right? And it was followed by that strong move, that really nice strong move, okay? But we have yet to get our volume confirmation. When we'll know the big pump is in when we get that big move, that big volume candle here, a big green volume candle, akin or even bigger than this capitulative volume candle, signifying the end of the downtrend, right? May 12th, most of these assets had that big candle that you knew unmistakably, without a doubt, this trend was finished, okay? You got a big volume candle, you got a big wick, right? Likewise, when you're breaking out of the trend after your long consolidation, expect a big pump with a big volume candle, kind of confirming that, okay? So back to what I believe Litecoin has been doing. I've been back and forth on this, but here is why I think that this is the correct count for Litecoin. Okay, do you see this? You came up with a big A right here, and again, I'm using Fibonacci retracement levels and Fibonacci proportions to give me confirmation or to support my thesis here. So big A, big B. If you don't know what I'm talking about, just ask. If you do know what I'm talking about, I don't want to bore you. I talk about this way too often, but I think I talk about it a lot, but it's necessary because nobody really talks about A-B bases, and Ralph Nelson Elliott did mention it in the Secret of the Universe, his manual, I think it's third one, but it's not something most people talk about. Anyway, small a is right here. I think small b is right here. And I think small a goes something like this. Okay, I know I've said that small a extends here, but I see this as being small b, that flat correction right there. Okay, and the reason I think this is small a is because if you take that Fibonacci extension, a and b of small a, you see the extension to the 1, 2, 3, 6 right here. I think that is it, right? Because C typically extends to the 1, 2, 3, 6, 1 to the 1, 2, 3, 6. Sometimes it goes above the 1, 2, 3, 6 and tests the 1, 6, 1, 8. So this is what you're seeing here. So if you take your retracement tool and it goes something like this, you'll take the orthodox low of this A wave to the high. You'll see that this retracement right here, this 3-wave retracement, that is small b, has come down to between the 0.5 and the 618, which is exactly where you want your zigzags to retrace to. You want your zigzag retracements, your 3-wave retracements in your zigzags to retrace between the 0.5 and the 618 on average. Okay, they can be more shallow, but on average that's what you want to see. So I'm expecting 5, 3, 5, okay? And the 5th wave, the C wave resulting from that move is where I think our next target is in Litecoin. I think it's something like this. You can expect something like this to come to your 1618. Boom. And you see that? That is confluent with the top of this move. You can't make that shit up. Look at that. Boom. You create your neckline here right at the phi ratio, the golden ratio, the 1618, okay? And you then consolidate a little bit and then you pump more. But if you want to take early profits here, I don't think it's a bad idea, because I think once you get to this 1618, you come back down a little bit here. You probably test this this level right here, which is a good support. Okay, so that would be your first wave of whatever smaller degree this is. So you're looking at something like this in the long run, something like this, boom, boom, and then yeah, something like that, just matriculating up and out. And again, this is a major reversal. So if you can, don't touch it. If you're in a position, don't touch it. Because, you know, the worst thing you can do is get in the way of an impulse. You know, if you're trading this, like for instance, I have a small leverage position, I think 12x leverage, okay, that I've been averaging into building this position, right, around here, and I'm just going to let it go as long as I possibly can. Obviously, I live off of my trading, so there's going to be a point at which I need to sell to pay bills or whatever, but this is a great position to hold, even if, you know, you do retrace a little bit, like you're at a macro low. So any leverage positions, hold as long as possible, right? Not financial advice. Also, this has what Bob Prechter would call the right look. If you just look at this projection, just look at it, it's symmetrically pleasing. And that's another good thing, cool thing about Elliott Wave. It's because it's a natural, it's a system based off of natural science and math and stuff like that. You tend to get patterns that occur in nature and that are naturally pleasing, right? Like the Fibonacci spiral and derivatives of that. And if you don't know where the Fibonacci spiral comes from, you can draw one from the 5-wave sequence. Obviously, my drawings aren't good, but if you're interested in this stuff, read Bob Prechter's and AJ Frost's the wave theory. I don't know what the actual, here, let's just do this. Wave theory. Prechter. And it has a long, goofy name. Key to market behavior. Okay, Elliott Wave principle, key to market behavior. Okay, that's what it's called. but it's called the wave theory for short, okay? If you're really interested in these natural sort of patterns and the math behind Elliott wave, Bob Prechter does it really well. He talks about it extensively. He spends the most time on that. You can tell that he's bought in, okay? And at the same time, he's like a scientist and he's objective and he doesn't buy into everything that Elliott said, but I mean, he's seen these patterns, you know, and he talks about how the Egyptians saw this and the Romans and the Greeks and all in all. So this isn't anything new. Pythagoras saw it. This is basically an extension of that, and we're using this to read markets. So anyway, this is what I'm seeing for Litecoin. All right, Cardano. Right, much like everything else on our watch list, we have an orthodox low in May 12th, right? Boom. And you put in your big A, your big B. I think this is your small A right here. This is your nice, like textbook flat correction, small B. And then right here, you have, this is why I call it A-B recursions, because it's kind of like it goes on and on and on ad infinitum on a smaller scale until it breaks. And that's what I think you got here, right? Although the majority of the pattern is complete, right, with the big A, big B, small b, you still haven't broken out because this recursion is continuing on a smaller time frame right here. And if you zoom in, and I've said this before, to smaller time frames, you can see the same stuff happening. So let's just look at that really quickly. So I zoomed in, and this is a smaller time frame, and you'd be confused perhaps into thinking that this is a larger time frame or the same thing. I'm showing you the same thing, but it's on a smaller time frame. So it's like, it's kind of a mind warp, or it's confusing, right? This is even smaller A. Let's call it alpha, okay? And then here you have a smaller B. Let's call it beta. And then I think you finally got your pump. So that's why I call it a recursive A-B base, you know, specifically speaking, because it's not just one A, B, and then a pump, right? Because Elliott said, oh, I've noticed you get an A wave and a B wave before you get a change in trend. Obviously, he was working off graph paper. We have the luxury of working with computers, and I can zoom in, and I can see that there's this pattern, this A-B pattern is a repetitive, recursive pattern. And that's what you see in math, right? You see recursive patterns in the golden ratio. It just keeps going, even if you can't see it on smaller time frames. Anyway, my projection on the larger time frame after this breakout for Cardano, much like these other ones, I can see a quick 40-50% pump, okay, to the top of this range right here. And I say quick, I mean quick. I think that's going to happen relatively quickly, and then you get a consolidation, and that consolidation, I would expect it to take, by the law, or not a law, it's not a law, it's a guideline, the guideline of proportionality. And you typically see the guideline of proportionality work out so well. I test this yourself, don't take my word for it. And everything I say, if you're really learning and you're using this channel in the way it should be used, if I say something right or wrong, go ahead and test it yourself. Have a look at it. Either research it, maybe I said something wrong or you think I said something wrong. Go look at Bob Prechter and AJ Frost's manual. Read Elliott Waves Made Simple. See if, you know, maybe I misspoke, or I'm inaccurate in some way, shape, or form. But a lot of the stuff I say is researched. You know, I do this for a living. I'm reading these manuals myself and rereading them and studying them. And I'm observing these things on a daily basis. Here's one thing. This I've seen so often using the principle or the guideline of proportionality. The time it takes, and I didn't learn this until recently, so, use this if you want. Usually, it'll take you the same amount of time, almost exactly, to form an impulse when you first start as it will to correct it. This happens very often. I've seen it probably 70% of the time. Okay, so I said really quickly, I don't know how long it's going to take to get 40-50% to the top of this range. Okay, I think that's your first target for Cardano right here. Okay, that's your first natural sort of target because you've been in 50-day consolidation right here, right? So it's natural, I think, that you'd find some resistance here. I wouldn't say much, but some. Okay, and obviously you have support there, so it's a likely target. Okay, so let's say Cardano does that. The time it takes, once again, however long it takes, maybe it takes a day, maybe it takes 8 hours, maybe it takes 12 hours. If it takes 12 hours to get up here, expect it to take 12 hours to correct from that. That is one of the most beautiful and consistent things I've noticed on the guideline of proportionality. So just measure that. And so even when I'm doing my mock-ups right here, you'll see sometimes I have, so let's say it takes 4 days, I'll have this wave 2 take 4 days. And wave 2, typically you'll see a sharp correction, a wave 2 correction that'll take you 61.8% of the way down. Reason being, most people don't believe in this. After all of this, they're like, we got a pump. I'm going to sell into strength. So they're going to sell and divest themselves of their positions. And you typically get a big sell-off here. And that's like a 61.8% move. And we all know that wave 2 takes you 61.8% of the way down. I disagree with Bob Prechter on this because he says it can go down further. I don't believe it can unless you're in a diagonal, okay? But in a regular 53535 impulse, you got to come down 61.8% of the way. If you come down even more, you're no longer impulsive. This is another correction. You're basically doing more of what we've been doing for the past 50 some odd days, okay? I think Bob Prechter gets that wrong. One of the few things I think he gets wrong. 1-2-1-2. And that's partly because he denies the existence of the AB base, and Ralph Nelson Elliott himself observed the AB base. So Rob Prechter doesn't believe in reversal patterns, just so you know. All right, in that way. So that's what I'm seeing for Cardano. I am expecting about 60% pump. And again, I would not be surprised if this happens in the course of just a few hours. Yeah. Remember, you're not used to markets moving impulsively. You've been sideways for 50 days. So any big move is shocking, right? So if I say 50% in a few hours, you might think I'm crazy, but just as it went down impulsively and it kind of tanked quickly, right? Like, for instance, here you got a 60% move. Well, that took quite a long time. But let's just say you got this 50% move in 7 days, yeah? Don't be surprised to get a 60% move in less time because, again, these are corrective. These waves are corrective. Let me go on log. Remember, you're in an uptrend in the aggregate. This was a corrective move. The actual trend has the power. If you go back into the actual trend, you start moving even more impulsively than you would in correction. Does that make sense? So yeah, I know it's been 400 some odd days that we've been in, a downtrend, corrective downtrend. So we don't even remember what it feels like to be impulsive, right? So yeah, can't blame anybody for thinking that is unlikely, but that's what I'm seeing. Jim Jones and the Kool-Aid Triggers. Can I have a mod wrench Um, what does that mean, Reverend? Uh, I like your name, by the way. That's funny. What does that entail? I've never done that before. And oh, dodge crickets. Why do you do such long trades? What do you mean by that? I still don't know what you mean. A Samware. Hi Azim, why did you set Dodo in your watch list fundamentally? Great question. Two reasons. It's a short-term trade. It's what I call pocket money for me, because I'm actually going to take. I'm going to take profit on Dodo soonest because I need to pay mortgage. So that's pocket money. That's like income for me. And my savings are kind of on the low end. That's number one. So I'm not looking to take this, long. And I just liked the chart. Okay, when I first invested in it, I looked at the chart. It was pleasing to me. I liked how the chart moved. Okay, and the second reason, I did some fundamental analysis. Okay, and great question, by the way, Samware. I looked, and this is when I do fundamental analysis, my friends. When I put in a significant amount of capital in any project, I'm not going to blindly put it in, because I don't want to get rugged and, get evicted. So I'm going to be careful as to what I invest in. And so I looked and I saw the investors and I saw Three Arrows Capital at the time. That was a great idea, okay? But more important, I saw Coinbase Ventures. And I didn't even just look at this. I just went straight to the website. Okay, and there's a series of things that I do when I check the viability of a project. But one of the things is I want to see who else invested. I don't want to be the first to the party, because there's some people, at these hedge funds that are paid a lot of money to invest in projects and to research projects and to make sure that they're legitimate. Okay, so I look at the investor shortlist. And I just saw Binance, and I saw Coinbase, and I saw CMS, and I'm like, that's good enough for me. If these people, Alameda, so if Sam Bankman-Fried, if, Coinbase, Pantera, basically anybody who's anybody in terms of big money in crypto has invested in this. I thought, this is a goofy-ass name. I don't take it seriously. And I'm not going to, because this isn't a long-term trade, I'm not going to take my time and do weeks long worth of research on this project. I'm just going to see if other people have bet on this, and based off of their bets and then based off of my technical analysis, I was like, I'm buying this. It's a pocket money trade. And because it's such a low cap, right? It's number 665. It's going to do numbers. It's going to do percentages. And basically when I was buying over here, and based off of my technical analysis, I'm basically buying it at pennies on the dollar. So I'm like, I'm getting good value. I'm liking how it's moving in its consolidation. And I like the fact that I don't think it's going to run based off of other people in the space investing in it. That's why I bought Dodo. Short answer, if that was short. I don't think that was that short, but yeah, that's why I bought Dodo. But again, it's not a long-term play for me. I am going to sell. I'm not going to sell too soon, but I'm going to sell maybe next month at some point, just because I have to. And if I could, I would just hold on to it. But I have to just, to pay for other stuff. It's not one of the bigger positions that I built. Like Cardano, for instance, I built a big position. Cardano, I built a big position. Litecoin is pocket money position. Reserve rights, big position. That's a pocket money position as well. Telcoin is a big position long term. Ravane, big position long term. I'm not touching. But yeah, so I've never really discussed that, but yeah, that's basically it. Let's see. Oh, So I want to answer Doge Cricket's question, and I'm not exactly sure what he means, but if I'm assuming he means, why am I swing trading versus trading these moves, right? For instance, high degree of probability that Bitcoin's going up here. Okay, why don't I just long this and then take profit? Because I was saying that down here. I could have just gotten in a position, leverage long and gone up. I've done that before. Of course, Samware, my pleasure. I've done that before, and it's a low probability trade. And I'll tell you why it's a low probability trade. Dodge Crickets. This is all corrective. This is all corrective price action. And one of the things that we know about corrective price action, especially with Elliott wave theory, is that there's so many versions, there's so many combinations, there's so much variety of what you can get. It is very, very choppy. It's low probability. Like, there's too much volatility for you to get a position and with a high degree of probability keep your position, not get stopped out, and make that trade. It's best if you zoom out when you're doing a consolidation. I don't always trade the same way in every market, okay? And I've said this before on the channel. I'm in the phase that I'm doing long trades and spot trades, okay? And most of my trades are spot trades. I have some small leverage positions, but very small. Because if I do get stopped out by them, okay, fine, I don't lose my shirt. But here, I'm just playing probabilities. And after this huge move to the downside where C is 1618 of this A wave, okay? There's so many things that are telling me that this is the bottom, relatively speaking. Relatively, okay? Again, you know that I think that we still need to do consolidation. But the market bottom, okay? So relatively speaking, there's that. There's, X, Y, and Z. I'm not going to go over it. But knowing that, I start to build positions, right? Not in Bitcoin, but in all these other altcoins around now. And the last thing I want to do is get shaken out and stopped out because I'm trying to short-term trade, scalp trade, a consolidation reversal of a historically long-term trend change, okay? If I know that, let's just do weekly time frame right here, log auto, okay? If I know that Cardano, and this has been true for a long time. I've looked at this chart and thought the same thing for a long time. This is very clear to me, an impulse, a 5-wave impulse, okay? This reversal has been very clear to me as a 3-wave correction, okay? It's been very clear to me for a very long time, probably since May, okay, early May, that what comes next, even before, actually, up here, it's been very clear to me that what comes next from this is a big move to the upside, okay? Given that understanding, why the hell do I want to waste my time trading for peanuts up and down moves up here? Because, again, these consolidation reversals are capricious, and I don't know exactly what shape they're going to take, but I do know, generally speaking, that this reversal, this correction is going to respect my 618 because this is very clear to me an impulse, and it's likely going to be likely a wave 1, and again my wave 2 correction. Remember when this was going up? I don't know if you guys remember, but Cardano was pumping. Every other day, double digits, sometimes triple digit gains. People were like, oh my God, this is crazy. And what did people do? They sold the top. They sold this move because they can't believe it, right? And so they faded this move in a typical wave 2 correction, which goes down to the 618 and it goes down sharply, right? Just like I said. And then again, what did I tell you about the guideline of proportionality? This shit is amazing. If you really know your Elliott wave, I mean, you have such a large edge. It took 105 days, okay? Cardano took 105 days to go from 31 cents to $26, okay? 105 days. That's about 3 months, right? It took about 182 days to correct and finish its correction. And then it took another 50 or so days to consolidate the reversal, all right? So if you know that it took 105 days and 182 days, again, it's not one-to-one, but it's close enough where you're getting that proportionally, it's a proportional correction vis-a-vis the pump. Okay, so all of that, sometimes it's one-to-one and it's perfect, but sometimes it's 1 to 1618. Okay, and so this is really cool. Something I would not be surprised. I haven't done this. Okay, so 105 days. I said 168 days, or how long did I say? And I don't know if we should count the reversal. Let's just count the orthodox end of the trend. 182. Okay, whoops. So 105 to 182. Okay, I would not be surprised if that came out to 161 to 1618 or something like that. You tend to see that. Like, time is just another dimension in the charts. Don't think, like in the beginning when I started Elliott wave theory, I thought time was completely random and there was no rhyme or reason. But then I started doing more research. There's, just like you see regularity and rhythm and proportion and price, you see the same thing in time. Let's see this. I'm going to pull out my calculator really quickly, okay? So I'm going to do 100 and... Okay, let me just remove this right here. Okay, because I'm not going to assume. I'm going to do 182 over 105. Hey, Google, what's 182 divided by 105?
182 divided by 105 is approximately 1.73.
1.73. That's close to 1618, okay? Again, you see, even though it's not one-to-one, don't be surprised if it's not 1 to 1618, 1 to 1236. These Fibonacci numbers come up all the time, and that's for time. There are legends in technical analysis that will give you the time plus or minus a month or two for major corrections, year-long corrections, okay? They exist. Do your research. Most of our market thinks it's impossible and there's no rhyme or reason to this. You have an edge on those people. They think technical analysis is a hoax. People who think technical analysis is a hoax don't do technical analysis and never looked into it seriously. People who actually use it and believe in it, don't believe in it out of blind faith. They actually use it and see these patterns over and over, and they don't know why, but they do see it work. Yeah. So I think that's really cool. Time is something that I'm working on, right, in terms of my growth as an analyst, but it's just a matter of, seeing more and more patterns. So anyway, that's why I don't try to be greedy and try to long or short, these little ranges. I don't have time for that. I'm building positions here. That's a smart thing to do. I'm building on support. I'm building on mathematical support. I'm building on a support that tells me that any day now I can expect a 105-day move, or some maybe even better, that will give me, what percentage was that? It was a crazy percentage. 31 cents to $26, 8,000%. The smart investor doesn't leverage trade the small moves here. The smart investor spot buys this region, right? Averages in their buys in this region. I actually was buying from here, okay? I was buying Cardano all the way up here because I thought that this was a reversal. I thought this was my move down here, down to the 382, okay? But again, had I been a better analyst, I would have expected the 618, because this is a 5 wave move. This is wave 2. typically comes down to the 618. Okay, but that was back then, and I'd grown, and I didn't really know that. So that's why I'm not trying to waste my time leverage trading small moves. But the leverage trades that I am making, for instance, I just added to my position in Litecoin this morning. A few bucks here and a few bucks there. The leverage trades I am making are all long, and they're all on. So this one's pretty. This Litecoin one's a little aggressive, okay? But I also have a very small position on Dodo on 3x leverage. I have a 12x leverage on Cardano, okay? But my liquidation point's all the way down here somewhere. But, you have to be careful. Anyway, they do not represent the majority of my positions. The majority of my positions cannot be liquidated, cannot be kind of... I can't lose. I basically just have to wait, right? Cadena can't lose because it's just a spot position. I sell when I want to sell. Ravane, sell when I want to sell. Dodo's, that's my pocket money one, but I have a big position there that is spot. It's all risk management, my friends. No matter how good you get, you know that there's stuff you don't know, because as regular and as tried and true as these patterns are, you're not always going to read them perfectly, and within the system that's 5 waves up, 3 waves back, or flavor thereof, there's so many variations, right, that can shake you out of your positions. So yeah, that's my answer for that. Okay, let's go down here. We're at reserve rights, I believe. Okay, and just like I'm telling you for these other assets, I'm looking at something similar in reserve rights, okay? You've been consolidating in this small range right here for quite some time. I'm not surprised if, actually, in reserve rights, won't be surprised if the next move comes up here. Okay? So we see something like this. And that gives you this nice W pattern, okay? So reserve rights, something like 2 cents, and then a little consolidation, and then a pop, okay? So I can see that happening in reserve rights, and that's very nice, 200%. I can see that, okay? It's volatile enough. And yeah, I don't see that taking too long. And yeah, that's why I see it. Just because I'm just looking a large time frame. I'm going to pull out my line chart because I don't draw straight lines, or my line tool. And it's clear right here that you have support here, support here. Actually, let's turn on the log. You have to turn on the log for these kinds of assets. They're too volatile. Okay. It's very clear here. I think it's very clear that this is crucial support when you're above it, and crucial resistance when you're below it. Okay, so this is crucial resistance to me. So I'm going to expect for the price to come here and then come down, maybe retest this support, or even lower, right? Maybe retest this support and then go back up. So that's what I see in reserve rights. Very volatile. Telcoin. Again, for these kind of really volatile small cap assets, I'm turning log on the larger time frames. Telcoin, I'm seeing it come up here to about 0.0045, okay, and that represents something like a 200% move. Again, volatile. Expect more upside, but then when it goes down a little more. And then to test the top of this range on the retrace before the continuation. Okay. Ravane, very volatile. Again, I'm seeing Ravane do something like test the bottom of this wedge, this falling wedge. So come up to this region right here. Turn on the VPVR. Yeah, it says something similar. Do you see that? There's confluence here. My VPVR is telling me that my next major resistance is at 0.0045. So I'm expecting in Ravane something like a 250 move, 250% move in that same time. Okay, expect these things because this is a bona fide reversal in my estimation. Okay, now let's look at the ones that you guys asked for. Let's see, T-Fuel and VRA. Okay, let's add those. And guys, don't forget to like the stream and subscribe if you're not yet subscribed. Let's see, T-Fuel. Let's look at the KuCoin chart. And then VRA. Let's look at the KuCoin chart as well. Okay, so T-Fuel, T-Fuel, T-Fuel. Not that much information on the chart, but from what I can see, the next logical resistance would be up here at 0.0745 cents. So 7.5 cents thereabouts. And that basically represents the top of your consolidation reversal range that you've been in for 50 or so odd days. So yeah, coming here. So T-Fuel, I expect it to make maybe a 50% move before consolidating a little bit and continuing on. Veracity. Here, let's see. I think it's clearly, right? Here. Two reasons. One, it's historical support, okay? So it would be resistance, right? Since we're beneath it. Right, strong support on the weekly right here, and it represents the top of the range of your reversal pattern. Remember, you had a reversal, you came down here and popped back up, and that was the top of your range. Expect this pump to come to the top of that range, which would represent about 106% move. Okay, so that's what I'm seeing. Let's see. Any other requests? Any other requests? If not, enjoy the pumps, my friends. I think we're finally here. I mean, it's now or never. It is now or never, okay? It would be a sick joke if we turned around and dumped from this. I really don't see it. I think it's very improbable. I think it's up from here. In most altcoins, like I said, and in Bitcoin and Ethereum, synthetics, some projects do expect limited moves to the upside just because you have yet to put in that consolidation reversal, and that's necessary for any major trend change. So that's what I'm seeing. Definitely like the stream, subscribe if you haven't yet subscribed, and that's it from me. I hope this was helpful. I hope this was useful. Have a great Tuesday, my friends, and I will see you tomorrow. Take care. I hate how it's hard to... There we go.